So let's take a look at basically consumer spending data. We saw the ABS report that housing spending in Australia climbed by 0.9 month on month in May, rebounding from a marginally revised flat reading in April, marking the fastest pace of growth since October of 2024. The pickup was supported by the May rate cut, which helped boost spending activity. So maybe they're just a bit worried here in this. Okay, expenditure bounced back for clothing and footwear, 3.7 versus negative 3.5, transport 1.7 versus negative 1, and furnishings 0.6 versus negative 0.5. Moreover, spending on miscellaneous goods and services accelerated 1.3% versus 0.1 of 1%, whilst outlays continued to rise for health, 1.1 versus 1.7, recreation 0.5 versus 0.8, hotels, cafes, restaurants 0.8 versus 2.3. On an annualized basis, personal expenditure increased by 4.2%, the strongest yearly growth in 5 months. So maybe again there is, and we know, in talking to and speaking with some of the sort of experts in this area, the older baby boomer generation, they have not experienced, they've got access to their super, they're out there living a great time, and that's...
They might not tell you that. So this gets back to what you were saying before.
Well, the ones we get reported on, because the journalists are looking for the ones that are doing it tough, and they want to report on those, but it does feel like there is a larger cohort that is actually going okay. Here's the business confidence and conditions survey from NAB, right? This one is the one we were talking about in terms of how business is feeling, how private investment is feeling in the current market. The NAB Business Confidence Index rose to 2 in May from a negative 1 in April, turning positive for the first time since January and marking the highest level in 4 months. Sentiment strengthened in most sectors except manufacturing, mining and wholesale. However, business condition eased. So confidence in thinking that the cash rate's going to move down has changed that positive sentiment, but condition eased again to 0 versus 2 in April. So it's coming back, reflecting a steady fall since late 2024. Here's the sub-indexes. Employment deteriorated 0 versus 4. Profitability stayed negative at -4. These businesses are struggling. And sales slowed 5 versus 4, with retail forward orders edging up, but this is -2 versus -3. Capital expenditure, did surge 6 versus 1, and capacity utilization was higher at 82.3% versus 81.4. Purchase cost growth moderated at 1.1 versus 1.7, whilst labour costs gained slightly 1.7 versus 1.6. Product price growth fell to 0.5 of 1%, with retail price growth steady at 1.2. NAB's chief economist, Sally Ould, said business conditions remain weak. If these conditions in the coming months continue, it will be difficult for confidence to rise from current levels. So it's
just snapshot that.
It's baking in this problem that we've got that we need to kickstart.
Sally Ould was one of those forecasting 3 rate cuts in 2025.
Yeah.
So take that as you will, but she's dead right. I mean, that's the thing to remind yourself here, is that this is what she does. This is her bread and butter. This is NAB's biggest input is business banking, and they know this better than anyone out there to say conditions are weak. And I would argue that little blue tick that you can see on the right of the screen, the next time that we present this to you, will be back in yellow, because today will have changed that.
It hurts.
It will hurt.
Yeah.
Because not only that, what we're talking about is future intentions. We're going to come to the US in a minute and about what's happened with, the outlooks. Whether you agree with Trump or not doesn't matter. The tariff uncertainty is creating all sorts of volatility. The RBA now creating a slight uncertainty about maybe they're not going to do what we think they're going to do, is going to change the outlook, and it's going to change that. And I'd almost put my money on the table saying that tick will go yellow for the next time you and I talk.
Well, I think also, if there is a silver lining, and, I don't like property speculation. I don't like it when the market gets ahead of itself. It's not good for anyone. But so let's have a look at some of the property data here. We can see this is the home lending data around the country. We can see usually what the indications are. If there's lots of activity, that's usually putting pressure on prices. And so we can see the WA markets, we can see the Queensland market very strong, and we can see the New South Wales flat. Victoria was actually coming down. South Australia has also been a strong market, and you can see, and Tassie's starting to have some life bred back into it. So it just also just reminds us that, that maybe the silver lining here is that there's a little bit more time before things get a bit hectic in the property market. So if you're currently looking, maybe there's not 5 competing buyers with you at the moment. Maybe it's just 2 or 3 that you're going to have out there.
Particularly after today.
That's my point. I mean, if there is a silver lining off the back of that, maybe you've just bought yourself a little bit of less competition at Saturday's auction.
Yeah.
In terms of the one we got here, the building approvals, this was obviously the 2.1 million target that we'd set in terms of trying to build a number of new houses by a certain time. We are miles off the target. Again,
what's fascinating by that whole thing, it was never even there.
No.
Right? I mean, that's what that shows you. That
it was an aspirational target.
But it's not even an aspirational target. It was. I remember when it came out, I remember sitting there going, we've never done that.
No. We've never
done that.
Even when we had the Asian building boom here, where all of the Asians were coming and buying our off-the-plan apartments, our building boom that happened was off the back of basically record levels of apartments being built in Melbourne and Sydney.
2018 was the record. I think it was 265,000
new builds. Yeah.
And we needed to basically do that from day dot. And we were never going to get there. And so what Ben's highlighting here is that, again, simple economics, the supply and demand side of the housing market is still, in my view, the fundamental driver of everything going on. And at the moment, all drivers are on the demand side, not on the supply side.
Correct. So here we are with quarterly growth rates pretty much across the board. The monthly ones fluctuate up a little bit and down, but you can see there your strongest markets still remain Perth and also Brisbane, with the outlier, unbelievable Darwin, shooting the lights out at almost a 5% growth. And then you can see the 1.5. Darwin is a hot market. Just go and have a look. There's about 150 odd properties available for sale in Darwin, and about 95% of them are under offer. So it just gives you a bit of an idea in terms of, and that's, you got to remember, Darwin's been dormant since the early 2010s. So that market is playing catch up, and yields and all of the opportunity up there is going to be pocketed by those people getting into that particular market.